Hi everyone, welcome to my channel. I'm Doris. I'm here to show you about my stock account and today's market update. Today, let's just do a quick wrap up of today's news and the fluctuations within the stock market. Today, the Apple has closed up actually to 172.66. SQQQ closed up $0.4 per share to 11.36. SPY closed down 0.69%. United Natural Gas also closed down 2.83%. The market generally closed lower, continuing the trend from yesterday. Nasdaq Composites closed down to 15,973.17. S&P 500 closed down 0.65%, and Dow Jones closed down 0.49%. In terms of the market fluctuations today, it's still mostly due to the economic data that's been released recently, and let's take a look at why. On Thursday, the Labor Department reported that the February PPI rose more than economists had expected, which grew 1.6% year-on-year, beating an expectation of 1.2%, and was revised to 1% from 0.9% last month. Excluding the food and energy prices, the core PPI rose 2% in February from a year earlier, beating expectations of 1.9% and unchanged from the previous reading. The core PPI rose 0.3% month-on-month, missing expectations of 0.5% but accelerating from 0.2% from the previous month. The PPI data for February showed that the U.S. inflation is still accelerating. As a result, U.S. bond yields climbed up on Thursday, with the benchmark 10-year Treasury note reached 4.29% at one point, and that was covered specifically in our yesterday's video. The PPI follows the CPI that was released on Tuesday. According to data, the CPI rose 3.2% year-on-year, which a better than expected CPI data leaves the markets betting that the Fed will not start cutting interest rates until at least the summer. The Fed will hold its monetary policy meeting on March 19th to 20th. Now that it is widely expected to keep interest rates unchanged for the fifth time in a row, the focus will be on the Fed's new dot plot of its path of raising interest rates. In December, policymakers' median forecast showed 325 basis points rate cut in 2024. To be sure, according to the FedWatch tool, federal funds futures expectations shows a 99% chance that the Fed will hold interest rates at the next week policy meeting. LESG's rate probability application shows that traders have cut the odds of the Fed cut in June to 60% from about 67% on Wednesday night. For 2024, the market is now expecting less than 3 cuts, down from 3 to 4 about 2 weeks ago, and down from about 7 at the end of the last year. But Mark Lucchini, chief investment strategist at Janney Montgomery Scott, said the recent economic data could raise questions about whether the Fed thinks inflation has cooled down long enough to start cutting interest rates later this year. He said, at least recently, the road to the 2% inflation target is not smooth. I think that's enough to dampen the enthusiasm of market participants. This is all I have for today. We just briefly covered the economic data that has been released in the past week, and let's take a look until the market reopens on Monday.